Will the result of the US presidential election have any impact on the performance of the US stock market in the next 4 years? That is the subject of my video today. The subject of my video is not whether you should vote for one candidate or another based on the potential performance of the stock market. That's not it at all. There are issues that are far more important than the performance of the stock market. The purpose of this video is simply to try to determine if there is any real difference between Donald Trump and Kamala Harris in terms of how the US stock market might perform in the next 4 years. In the first section of this video, with respect to the three possibly most important factors that will be impacting the US economy and financial markets in the next few years, I'm going to argue that it really doesn't make any difference at all whether Donald Trump or Kamala Harris is elected. In the second part of this video, I'm going to be presenting 5 factors where it might actually make a difference who is elected. Let's start out by reviewing 3 important factors where the winner of the US presidential election really won't make a difference in terms of the performance of the stock market in the next few years. The first, and perhaps the most important of these factors, is the fiscal situation of the United States. The United States is currently running a cyclically adjusted fiscal deficit that is the highest that it's ever been outside of wartime. This poses a very serious threat to the US economy in the long term. But unfortunately, neither Kamala Harris nor Donald Trump have presented any sort of a program that could address this very serious problem that the United States has. On the one hand, Kamala Harris has proposed increasing taxation, particularly taxation of the rich and corporate taxes. But on the other hand, Vice President Harris has also been proposing a series of spending measures, such as subsidizing financing for minority businesses and subsidizing the purchases of new homes for first-time home buyers that more than compensate for the tax increases that she's proposed. Therefore, under a Harris administration, we shouldn't be expecting the US fiscal situation to improve any at all. Donald Trump, on the other hand, has proposed cutting corporate income taxes and cutting personal income taxes, which in principle would actually make the deficit worse. Now, he's recently been talking about enacting a series of spending cuts led by a commission that would be led by Elon Musk, where he's going to be looking for up to $2 trillion per year of spending cuts. However, Donald Trump has never shown in his political history any special interest in actually reducing the deficit nor in cutting spending. And in particular, spending cuts would actually tend to harm economic growth in the short term, and it's very unlikely that Donald Trump is going to be enacting serious spending cuts that might actually harm economic growth during his term. Therefore, there's very little hope that under a Donald Trump administration, the US fiscal deficit situation would improve. The final point that I want to make with respect to the US fiscal deficit is that regardless of what Donald Trump's plans are and what Kamala Harris's plans are, they would need to get those plans through Congress. And unless both houses of Congress are in line with Donald Trump or Kamala Harris, in other words, the president, the House of Representatives, and the Senate are all from the same party, it's very unlikely that the US Congress is actually going to approve the plans laid out by Donald Trump during his campaign or the plans laid out by Kamala Harris during her campaign. In the United States, it's actually Congress that sets fiscal policy. So in reality, the plans announced by both candidates may not amount to very much at all. Now, a lot of investors are probably concerned with how US economic growth will perform under a Trump or a Harris administration. But the reality is that economic growth in the next 4 years is unlikely to be significantly different under either a Harris or a Trump administration. And here's why. The U.S. economy is currently at full employment. Economic growth is the sum of growth in the labor force plus productivity growth of workers. When an economy is at full employment, labor growth or growth of the labor supply is very slow. It grows at a very slow rate. And so productivity growth is the only means of increasing economic growth very much when you're at full employment. But here's the thing. The productivity growth that we're going to get in the next 4 years is really a lagged function of developments that occurred 10 years ago, 5 years ago. The policies that Donald Trump and Kamala Harris are going to implement in the next 4 years will probably or may impact economic growth 4, 5, 6, 10 years from now, but they're going to have very little impact on productivity growth in the next 4 years. Therefore, since there's very little that either Donald Trump or Kamala Harris can do to increase productivity growth in the next 4 years, it's very likely that overall economic growth is going to be very similar in the next 4 years, regardless of who's elected. Now, possibly the single most important issue that could have a tremendous effect on the U.S. economy in the short term and in the intermediate term is whether or not there's going to be an all-out war between Iran and Israel. A war between Iran and Israel could cause a disruption in global oil supplies, which would cause global oil prices to rise tremendously, and that would have an extremely negative impact on the U.S. economy. For reasons that I explain more fully in my YouTube playlist called Oil Shock, which I really encourage you to watch, neither Donald Trump nor Kamala Harris are going to have much of an influence on the timing of an eventual war between Iran and Israel, nor on the ultimate outcome of this war, nor on the effect that this war might have on the economy and U.S. financial markets. This is because Israel, in my view, has already made a decision that it is going to engage Iran in an all-out war, and that it's going to do so in just the next few weeks and few months. Now, this is a decision that the Israelis have made in accordance with their perception of what is in their own best national interests. And regardless of whether Donald Trump is elected or Kamala Harris is elected, we believe that the Israelis are going to be engaging in actions which necessarily will trigger an all-out war between Iran and Israel. Now, let's look at 5 areas in which the winner of the next presidential election could actually make a difference in terms of the performance of the U.S. stock market in the next 4 years. The first area in which there's a very clear difference is in the corporate taxation policies that are being proposed by Donald Trump and Kamala Harris. A Goldman Sachs study estimates that if Kamala Harris were to implement her plan, that the earnings or EPS growth of the S&P 500 would decline by approximately 5% as a result of higher corporate taxation. On the other hand, as a result of Donald Trump's plan to lower corporate taxation, Goldman Sachs estimates that the S&P 500 earnings could actually rise by approximately 4%. Now, while a potentially 9% differential in the earnings of the S&P 500 might seem substantial, the reality is that that 9% differential is just a one-time effect that's going to happen during the 4 years of the presidential terms of either Trump or Harris. But the value of stocks is the present value of all corporate earnings between now and eternity. So a 9% increase in earnings in the next 4 years, when we compare that to all earnings between now and eternity, the impact is relatively minor. When you do the math, the impact would be on the order of 1 or 2% in terms of the value of the S&P 500. Therefore, the impact of their proposed tax policies is relatively modest, even if they could actually get them through Congress. Now, the second area is international trade. And this is an area where both candidates have very different proposed policies. On the one hand, Kamala Harris's policies in terms of international trade are likely to simply be a continuation of what we saw under the Biden administration, whereas Donald Trump is proposing drastic increases in import tariffs. Now, what would be the effect of this? Well, under the current regime, U.S. corporations are making record high profit margins. When U.S. companies are able to access imports for their production at the cheapest possible price in overseas markets, that helps to maximize their profits. But under Donald Trump's proposal, the price of imported goods that go into production would increase, and this would increase production costs for U.S. companies, which would lower their earnings. It would also hit the purchasing power of consumers by raising inflation, by raising the price of goods that consumers buy. So for both of these reasons, corporate profits would actually tend to be squeezed under Donald Trump's proposal to tremendously raise tariffs on foreign goods. Raising tariffs on foreign goods might be good for America overall, but it's certainly not going to be good for U.S. corporate profits, particularly in the short and in the intermediate term. A third area where both of these candidates have significant differences is with respect to their policy on the Russia-Ukraine war. Under a Harris administration, it's likely that Ukraine will be able to continue to count on massive U.S. aid and massive U.S. support, which will cause this conflict to drag on for a considerable period of time. Donald Trump, on the other hand, has expressed his desire to end this conflict very quickly, and he's going to do that by essentially taking aid away from the Ukrainians, forcing them to come to a quick settlement with the Russians. Now, this issue is very important for U.S. national interests in the long run. But in terms of the U.S. stock market, the impact of these different policies by Trump or Harris won't have much of an effect on the U.S. stock market. There are some U.S. companies that will benefit from lower input prices as a result of the lowering of the cost of certain commodities that are sourced out of Russia and that are being impacted by supply chain issues that were affected by the war in Ukraine. But overall, the impact of their policies on this particular issue won't have a large effect on the performance of the U.S. stock market in the next few years, unless one of the candidates were to do something that were to cause an escalation of the war. But if we assume that neither candidate will actually do something that will cause an escalation of the war, then it's unlikely that either of their policies will have a major impact on the U.S. stock market in this regard. One potential area where the two candidates differ and which could have a major long-term impact on the performance of the U.S. economy and in the U.S. stock market is their policies regarding regulation and deregulation. Specifically, Elon Musk, who has Donald Trump's ear, has been proposing that the U.S. aggressively deregulate the economy in order to allow entrepreneurs to be more efficient and more dynamic. Now, it's very unclear whether Donald Trump is actually going to make this a priority in his administration. And it's also very unclear if the U.S. Congress will actually approve any measures that are put forth by the Trump administration. But this is very much a wild card, because if Elon Musk manages to convince Trump to really undertake a serious deregulation of the economy, and if Elon Musk is able to impact public opinion on this issue to the extent that Congress will be able to pass deregulation measures, then this could actually have a very important long-term effect on U.S. productivity. However, even if they're successful in producing this deregulation, it's unlikely to produce very many significant results that would impact economic growth in the next 4 years. It's something that could impact economic growth in the long term, and for this reason, the stock market as a discounting mechanism could start discounting some of those benefits. On the other hand, Kamala Harris hasn't proposed any sort of deregulation. She hasn't proposed any sort of change with respect to the policies that existed in the Biden administration. Under her administration, we can expect a sort of status quo which is simply a continual ratcheting up of US regulations that tend to make doing business in the United States somewhat more complicated. Now, it should be noted, I'm not saying that deregulation is a good thing or a bad thing. I'm simply saying that deregulation would be a good thing for US economic growth and corporate profits. There may be other disadvantages to this, but again, this video is focused on the impact on the US economy and US financial markets. Now, the fifth and final area that I'm going to discuss is the very different policies of Donald Trump and Kamala Harris with respect to immigration. Now, earlier I mentioned that due to the fact that the United States is at full employment, economic growth is likely to grow at a relatively slow rate in the next 4 years. One of the only ways to boost economic growth is to actually increase immigration, because increasing immigration increases the number of workers, which actually increases production, which increases economic growth. Now, there are some also very serious disadvantages to immigration that grows at too high of a rate. And I'm not going to discuss those here. But the reality is that a high rate of immigration does actually boost economic growth in the short term, which boosts the sales of US companies. And also the supply of labor helps to keep wages down. And US companies benefit from low wages. And so the policies of the Harris and Biden administration are one of the reasons why corporate profits are at an all-time high. Now, under a Trump administration, if they clamp down on immigration and the rate of immigration into the United States slows down significantly, there's going to be two things that are going to happen. First of all, it's going to slow economic growth. Why? Because it's going to slow down the rate of production, and it's going to slow down the rate of sales growth that companies enjoy. But perhaps even more importantly, what it's going to do is it's going to cause a tightening of labor markets. When you reduce the supply of labor, what that causes is that the cost of labor, wages, will tend to rise. And when wages rise, this squeezes corporate profitability. So the different immigration policies of Trump and Harris will actually have or could have a pretty substantial impact on corporate profitability and therefore on the US stock market. So let's briefly summarize the impact of the winner of the US presidential election on the performance of US stocks during the next 4 years. First of all, I pointed out that with respect to the most important issues that can affect the US economy and the US stock market, it's not really going to make any difference whether Donald Trump or Kamala Harris is the next president of the United States. However, I did point out that there are a few areas, such as the policies on immigration, which could actually have a reasonably important impact on the performance of the US economy and the US stock market during the next 4 years. Now, I want to conclude this video with a reminder. A lot of people are really excited about the US presidential election, and a lot of people are speculating about the impact that the election will have on the markets. But the reality is that the most important event that could actually impact US financial markets in the short term and in the intermediate term actually has nothing to do with the election. It has to do with the potential all-out war that could get started in the next few days between Iran and Israel. And this is something that I have covered very extensively in this channel, and I have a playlist that's specifically devoted to this. So I really encourage you to subscribe to this channel so that you can continue to hear my analysis of this conflict and how it will impact the US economy and US financial markets. I also encourage you to look at two of my links in the description where I have two services, where I have model portfolios that show investors, show people just like yourself, how you can take advantage of this situation of a potential war between Israel and Iran. I believe that this is a once-in-a-decade opportunity that is forming here. And if investors are prepared, they will be able to achieve extraordinary returns in the next few months. So subscribe to this channel, take a look at my links, and we'll see you next time.